Hi, Investor Nation, Tasty Nation, and anyone who is interested in 0 days to expiration options. I'm the Canadian options trader, and I'm going to talk today about my success with my daily Iron Condor strategy in SPX. After more than 500 trades, I call it 500 occurrences, I'm pretty convinced that my strategy really does work, and it's been profitable over the past 2 years. This is the third 0 DTE video I'm doing, and if you click on my YouTube page and click on popular videos, my top video here was 100 days of SPX 0 DTE Iron Condors. That was the first video I did. And then the second one I did was called How to Set Stop Orders. And that's for those same Iron Condors. So today's video is going to be the third installment of my 0 DTE series. I'm going to focus mainly on my trade log, which is a public spreadsheet that everyone can access, and on the specifics of my Iron Condor strategy and how it's doing lately. So here's my trade log. The link to this is in the show notes. And when you first open the spreadsheet, you can just click here on one of the boxes in the date column and then hit Control-Shift down arrow on your keyboard, then scroll down with your mouse wheel. And you can see at the very bottom is my last line of data and also my graph of my P&L curve for this trade. So this is all real data. These are all my trades that I actually took. And as you can see, I've got an upward sloping P&L curve. So this is a profitable strategy. I've actually done 533 occurrences as of today. And as you can see, I've pretty much proven that this is a profitable strategy. And I think I can attribute my success here to just following the mechanics and sticking with them and not trying to overthink it too much. Just do the same thing over and over again every trading day once I figured out what works best for me. I don't think there's really a best 0 DTE strategy. I think there's probably just trade-offs between some of the specific details of how wide are the wings, how you set your stops, how much profit you make, and your drawdowns. I'm not really sure what is the best way of doing 0 DTE. So if you have any comments or criticisms of my strategy, please write them in the comments section below, and I'd be very happy to hear them. And please tell me, how are you trading 0 DTE? Maybe it's working better for you than my strategy, and I always respond to every comment. One of the main changes I made to my strategy since I put out my last 2 videos was I've actually changed to 25-point wide Iron Condors. So I've written that in a few places on this spreadsheet. The main reason for that is I'm using a little bit less capital now, so 25 wide. That means I'm putting up $2,500 for each trade. Not that that's any better, it's just my own personal preference. I actually got that idea from Tammy Chambliss. She switched to 25 wide a few years ago, and I tried it myself, and actually I liked it. Tammy, of course, is the originator of this strategy. Tammy always gives away everything for free, and that is also my intent with my YouTube channel, is just to share everything for free, all my knowledge that I've accumulated over the years of trading, and hopefully help someone out there, especially some of the beginners. So if I scroll over to the right a little bit here, I've got my actual trade strategy written right here. So what I do is I sell both sides at the market open, so that's an Iron Condor. I sell a put spread and a call spread. And then I set my stops at 3 times the credit on the short strikes. So that's 2 separate stops. So I set a market stop on the put side for 3 times the credit I received on my short put. And I also set a market stop on the call side for 3 times the credit I received on the short call. So the net stop is actually 2 times. And remember, I did show that in my video called How to Set Stops on 0 DTE SPX Trades. I'm still using interactive brokers right now because I'm in Canada, and I'm still patiently awaiting for Tasty Trade to come to Canada now. Of course, the new brokerage name is Tasty Trade. And I aim for roughly $1.70 on the whole Iron Condor. And just due to put skew, because puts trade richer than calls, usually it ends up being about $1 on the put side and 70 cents on the call side, which add up to $1.70 total credit. I never re-enter after a stop out. So if I get stopped out on my short put, for example, I immediately just try to sell the long put to try and get whatever I can, and I don't re-enter on the put side at all that day. I can tighten my stops towards the end of the day, but I never close early. So that's 25 points wide or $25 wide on my long wings. So that means in the absolute worst case scenario, if my stops fail for whatever reason, the most I could lose is $2,500 minus the credit I received. So that would be my open credit column here in my spreadsheet. So for example, on Friday here, I collected $1.80, that's $180, and I had to put up $2,500 in capital to do that. And my average P&L for all these trades is only $19.24. I actually had that up over $20 per trade a few weeks ago, but just due to this little downturn here, it reduced it down to under $20. So you might say, well, that doesn't seem like a great risk to reward to put up $2,500 to only make $19 a day. And that's a valid criticism. But the good thing about this trade is you get back that capital at the end of the day. So I put up my $2,500 during the trading day when the trade is on, and then at 4 p.m. Eastern when the trade comes off, shortly after that, I get that capital back and it's either a win or loss at the end of that day. So I had a lot of requests from my last few videos from people asking me permission to edit my spreadsheet. So I want to make it clear right now, you don't have to do that. You don't need my permission. I'm giving this away for free. All you have to do is you have to have a Google account and you just click File, make a copy, and you can do whatever you want with the spreadsheet. You don't need my permission, so don't even bother asking. You can see all my formulas and how I set up these charts. So it automatically charts this every day, every time I enter a new row of data. So maybe you want to adapt this to your own trading. Even if it's not a zero DTE strategy, you could probably use something similar to track your own trades. And of course, if you want to see what I'm trading for the day, you'd have to come back to my original public spreadsheet to see the last line of data that I've entered to see what I traded for the day if you're interested. You might want to compare what you're doing to what I'm doing. And a lot of times I hear from some of my viewers that on days that I get stopped out, they don't get stopped out and vice versa. Sometimes it's really interesting to try and figure out, oh, hey, why did I get stopped out that day and my friend didn't? So I'm very happy to discuss individual trades. Just write in the comments section and I'll try and respond to that the same day. So like I mentioned in my previous videos, the worst part about this trade is the drawdowns. There was a huge drawdown here back in October 2021, and it went on for about 3 months to January 2022. And this is one of the reasons why I trade this trade very small. Can you imagine if you were trading zero DTE with a significant portion of your account and you had a drawdown of about 50% from there to there? That would not be fun.
Emotional damage! Where's the therapy button?
The way this trade has been working is I get a series of slow, steady, positive returns, and then all of a sudden I get hit with a big downturn. So that's why I have the bird and elephant here. So just to remind myself not to trade this too big. We always have to remember Tony Batista's saying,
I would say in a Brooklyn way, you eat like a bird, you poop like an elephant. At the time when things go wrong, they go horribly wrong.
So I want to make sure I trade this trade small enough that these drawdowns are not going to hurt me. So currently I'm trading just a one lot. And I think that's probably what sets me apart from a lot of other zero DTE traders. I've heard a lot of situations where traders will blow up their whole account and they can't recover because they traded too big. Well, I'm trading a one lot Iron Condor every day. And for my size account, I could probably do more like 10 or 20 lots. But I choose just to do one, so I don't have to worry about it during the day. I like the set and forget strategy. So I just set my stops and let the probabilities play out. And maybe I'll check on my trade at the end of the day, just before the market close. One of the questions I had in my previous video is, what is this additional credit column? So what happens if I get stopped out, and I'll get an alert right to my smartwatch that I got stopped out, so my stop order filled, and then I'll immediately pull out my phone and try and sell the long strike for whatever I can get. So for example, on Friday here, I got stopped out on the call side, and I had my call stop set at $3. I got filled at 310, and then I immediately pulled out my phone to try and sell the long call, and I got 75 cents for it. So I include all of my commissions in here as well for a total loss of almost $65 for the day. So these are small losers. That's why this strategy works. I want to keep the losers as small as possible, but it's these big drawdowns that can really hurt. So that's a series of consecutive losers, or maybe a few winners and then more losers and a few winners and more losers. That's what causes the drawdowns. This is not a high probability trade, by the way. I'm only getting a win rate of 54% and a loss rate of 46%. And if we scroll over to the right here, I've got a little calculation here. So if you take my average win, $19.24 multiplied by 250 trades for the year. So I expect to make about $4,800 on the year on this trade on average. So basically putting up $2,500 in capital, I can almost double that in a year. Another question I get sometimes is that I only have one stop column. So generally what I'll do is I'll put in the credit I received for the short put, because that's usually the higher credit. And if I get stopped out on the put side, like this day here, that column will just stay the same and I'll write in what I got filled at. But if I get stopped out on the call side, I'll go and change my actual credit that I received on the call side. So I don't really have two separate columns for my stops, because generally I only get stopped out once on a given trading day. Now, having said that, there have been 11 occurrences in the past 533 trades where I got stopped out on both sides in the same day. That's the worst kind of trading day, but thankfully it only happened 11 times out of 533. So that's around 2% of the time. So that's something I just have to expect going forward. About 2% of the time I might have a double stop out, and I log that in my trade log by clicking on both here. And then I'll write in some more information about my two different stops right there in the notes. So that was a bad day, April 14th, and it shows in my P&L for the day. So a double stop out is the worst day, except for days like this day here, where I might might get a really bad fill. This is another downside of using stops on 0DTE trades. I had my stop order in on the call side for $2, but I got filled at $5. Man, that was a really, really bad fill. There's not really much you can do about that. You could try maybe a stop limit order, but I don't like stop limit orders because I want to guarantee that I'm going to get out so I don't hit my max loss on that trade. But please tell me in the comments section, do you ever get bad fills on your stops? Let me know what your solution is to that or how you've been able to manage that. And by the way, I want to be clear that I only use a very small portion of my account, just a few percent of my account, to do 0DTE trading. The vast majority of my account, up to 50%, I use to do the regular Tasty Trade mechanics. So if you want to know more about that, I have this video called Tasty Trade Mechanics on 2 sheets. It basically describes the vast majority of what I do. And I take just a small percentage of my cash balance each day and dedicate that towards 0DTE trading. And it's working. I'm on track to have my most successful trading year this year. And it's thanks to the Tasty Trade Mechanics, not to 0DTE. But I still like to do 0DTE trades every day, 250 trading days a year, because I want to use some of the cash that I have sitting on the sidelines, put it to work during the day, and try and earn an extra few percent on my account for the year. So like I mentioned in my previous videos, I would not recommend 0DTE trading for beginner traders. I would really start off with the regular Tasty Trade mechanics first, learn how options work for several months, if not more, before you even try a 0DTE trade. So I've done over 500 0DTE trades and I'm still here, so I must be doing something right. But that's because I learned the Tasty Trade mechanics and everything from the Tasty gang first. Also, the other thing I wanted to mention here is if you hover your cursor over top of my trade plan with backtest, there's a link there. You can click on that link and it will open up a backtester that I've been using for several years now. I call it Kyle's backtester. So I was in a group with a guy named Kyle, who was the genius behind all this. We paid a membership fee to this group and it paid for the data for 1 minute data. So we were able to do some backtesting using 1 minute data from SPX. But since then, Kyle has made this website called Trade Automation Toolbox, and it's now 15-minute data. So it's not quite as good as what I used in the past, but it still can give you a general ballpark for what sort of strategies you might want to try, and you can tweak some of the parameters for what you might want to try yourself. So this is my current strategy. I do just one contract and I'm trading both the puts and the call side. So that's an Iron Condor. And I try to collect a total of about $1.60 or $1.70 on the whole Iron Condor. So if I split that into the two sides, the put side and the call side, I just threw in a number of 80 cents there. These are the commissions that I pay with Interactive Brokers, and my 3 times stop loss or 2 times net loss, I always hold to expiration and I enter the trade around 9:33. So right when the market opens. So if I run that test, it'll give a result something like this. So on a $100,000 account, trading just a 1 lot, which is very, very small, you could have earned about an extra 4% on this trade over the past 7 years. And it's got very low drawdowns. So the max drawdown was minus 3.7% in 2018. Now that was a losing year, but that losing year was only minus 1.5%. So that's what encouraged me about this strategy. I want to have small drawdowns. This is trading it as one contract in a very large account, $100,000 account. But what if you, for example, change that to 2 contracts and rerun the test? You'll get a result something like this. So doing just 2 contracts, you can earn a compound annual return of 7.15%, but you can have a drawdown as much as 7% in 2018. That was the worst year, or a losing year of minus 2.8% in 2018. So you really have to figure out what works for you. And this webpage, maybe this will help you in some way to come up with your own strategy that you think you might want to try with real money and real dollars. This is all simulated, of course, and keep in mind this is 15-minute data. It might not be super accurate, but it can give you a general idea. So for a spread width of 25, trading 1 contract, you're putting up $2,500. And over the course of 7 years, you could turn that $2,500 into $21,000. That's if you do the same trade every day and don't screw up at all. And everything works just perfectly, which we all know in practice doesn't always happen that way. So with 2 contracts putting up $2,500, after 7 years, you could earn $42,000. That's, again, if everything works perfectly, which we know doesn't always happen in real life. So Kyle is the brains behind all this. So thank you, Kyle, for that. This has helped me over the years. But now that I've established what strategy I like, I'd never really go back here and tweak this at all. I'm just showing this to the viewers in case they want to do this on their own. I know what's becoming popular these days is doing a whole bunch of entries throughout the day. That's for people who have a lot of time on their hands and time to sit at the screen and enter multiple times throughout the day. I'm just a one-lot trader and I trade just once per day, so I do it near the open. Okay, thanks for watching. Hopefully you learned something. I really enjoy doing this and sharing my knowledge, so I expect this video to get a lot of views like my other 0DTE videos, and I don't sell any products or services, not yet anyway. But if you want to have a free 30-minute coaching session with me, the Canadian options trader, especially if you're a beginner and have some specific questions for me on how to get started with options trading and investing, I'm going to start accepting applications for that. Send me an email to drzaius3@gmail.com. Write the word coach somewhere in the subject line, and in your application, tell me why you want or need a free coaching session. And if you're selected, I'll get back to you with potential meeting time over Zoom. After the first 30 minutes, obviously I would have to charge for my time. So depending on demand, I would consider offering a paid coaching service in the future if that helps others. Okay, thanks for watching.